Now, over now to the markets here in Lagos, we saw the Osha index giving up some of the gains recorded on Thursday, down just under 0.5% today. Some of today's top losers were corn oil, Dangote flour, custodian and allied insurance. On the other side of the table, we had Forte Oil, MTN Nigeria, Burger Paint, and GSK from the pharmaceutical sector of the market. Andrew Tsaku, trader at Kapital Care Trust, joins me now from the NSE to review today's trade, this week's trading. Andrew, thank you for taking the time out to join us.
Great pleasure here, Esther.
It appears to have been a lackluster trading this week. We saw gains yesterday, a ray of hope for the market yesterday, but again today investors swooped in to take profit. In your words, just summarize how you would describe a trading this week on the local bourse.
Essentially, I think the entire market has remained perturbed by waning sentiments, and we've continued to see, significant decline, not just in terms of prices, but particularly also in respect of volumes and values. And that is explainable, given the fact that for as long as investors remain hands akimbo, you do not expect any push in the market, and until we begin to see a rejig of that sentiment and passion towards investing in the marketplace, we probably will have to have more days or many more days of lackluster performance than ordinarily one would expect. So that's been the scenario here, Esther.
But then, we had all hoped that with the half-year earnings release, with some good numbers, that would have lifted sentiment. But for you, looking across those earnings, what would you say has been the common denominator across those numbers?
The behavior of the market, sometimes you just have to take the back seat and begin to look at issues all over. Ordinarily, the announcement of a sterling performance from any given company should kind of excite the market, and especially investors' interest towards such. But that can also only happen on a normal situation. What we're undergoing at the moment is actually significantly a departure from the norm, where you find companies declaring dividends, and rightly so. And yet the market tends to punish such companies rather than reward them. And I'll give you an example. Corn oil, for example, is due for a payment of 2 naira in dividend, and the stock lost in price today, kind of approaching the lowest in a fairly long time. And you wonder whether indeed the investors are not quite excited about such a stock or not. However, I think the overriding consideration is the fact that people are a little more futuristic. Yeah, some companies are giving good reports, but overall, quite a number of people are still thinking, not too certain what the direction of the economy is and the direction of even policies. At the moment, we're beginning to get feelers, yes, following the screening of the ministerial nominees and all that portfolios will be assigned. And probably by the time the FEC is constituted, we probably will get to know or better have a feel of the direction of the economy. So I think much depends on the driving force of the economy. And in Nigeria, government business is big business.
Okay, because I'm happy you mentioned the economy, because I was going to talk about that. But is it safe to say at this point that is the number one major source of worry for investors? That's continued lingering uncertainty and then just waiting for direction or policy direction for the economy, and also keeping in mind what the projection for economic growth is for the year 2019.
I agree with you that it is a substantial consideration, a significant one at that, but not only the only consideration. You made reference to the performance of companies and the numbers that are coming out from there. You need to have an economy that is evolving, that is tangential and forward-looking. You need also to create some level of confidence in the minds of the average investor, because uncertainty tends to wane on that passion to invest. And sometimes people have cold or catch cold, some kind of cold, and rather would want to keep their monies under the pillow if that was a possible option, rather than take the risk of putting it in certain assets that over time may suffer loss in accretion. So To that extent, we need the economy to bounce back. We need policy direction to be specific and at least give some ray of hope and certainty of direction. So for as long as those indicators lie in the limbo or only in the minds of those that are saddled with the responsibility of coming up with such policies, we will continue to see some waning sentiments.
Now, Andrew, I know that it hasn't all been doom and gloom. Could you talk to us about some of those stocks that, I mean, in the midst of all of this, some of those stocks that you've seen are still holding their head above water, perhaps in terms of daily volumes and how the strength of the bids that we see on a daily basis on these particular stocks?
Quite a number of stocks that you see trading big time volumes are largely, what you call in the realm of cross deals. For example, we saw a significant activity in MTN today, where we had in excess of 24 million units of that stock trading, and that actually changed the landscape as to volume and value of activity today on the bourse. But if you discount such a transaction, it gives you an average of a low-lying index still. So we will continue to see a few of such orchestrations taking place, but banking names will continue to post a relatively high volume on the activity chart. And a few others, just kind of gleaning the way through. But by and large, on a muted level, the average is still much more lower than ordinarily should be registered on the daily bourse.
Okay, Andrew, thank you so much for talking to us today. We appreciate your time. Andrew Tsaku, trader at Kapital Care Trust.